The Fed is set to cut rates in December, and I think maybe more importantly, QT or quantitative tightening is ending. President Trump just recently said he knows who he's going to pick as Fed chair and announce it soon. I'm going to guess it's going to come around or slightly after the FOMC rate decision, but markets are anticipating this to be Kevin Hassett. Number two reason for expecting a rally in December is that the economy is still healthy. There's still plenty of pent-up demand, and the ISM manufacturing has been below 50 for 3 years. Now that is going to be updated this week. Bears have dominated market sentiment all year. There have only been 12 weeks where investors have been positive. Now, why is that? I think it has to do with the fact that people have been trying to time the market.
As we watch the market accelerate, in the final weeks of 2025, we finally see Bitcoin climb to $94,000, a day before the expected rate cut by the Fed, as Ethereum remains below 4,000. The crypto market remains in limbo, as crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks. This crypto cycle is heating up, and Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug of war we see when an asset approaches such a huge barrier. The bigger picture looks very different though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
6 reasons why I expect stocks to rally in December. The government shutdown's over. We've had a blackout of economic data, and that markets don't like the lack of information. That's going to have a restoration of visibility. There's performance chasing. Investors are off sides in November because a lot of funds actually threw in the towel. They just thought the markets made the highs for the year. And already 2025 was the worst year for fund managers, with 78% trailing their benchmark. Stocks got oversold. And I think especially when you look at RSI. This is daily RSI for the S&P year to date. And the daily RSI fell to 35 in November. That's the most oversold it got since the April tariff lows. And as you can see on this chart, once you made those lows on the RSI in April, market began to rally pretty sharply. And lastly, it's seasonal. December usually finishes strong. And given the pullback in November, I actually think December is shaping up to be a good year. Good month. The rule of 10 best days states that the S&P makes most of its annual gains in just 10 days. And it means don't time the market. And this year was a really stark example. Since 1928, the S&P's returned 8% a year. Excluding the 10 best days, though, it's minus 13%. That means you missed out on 2,100 basis points if you didn't own the 10 best days in every year. Since 2016, this rule's also held. The S&P's returned 14%, but it's minus 9% if you don't have the 10 best days. That's 2,300 basis points a year. All of the gains basically in the market are made in 10 days. Let's just look at the last 3 years. In 2023, the S&P was up 24%. but excluding the 10 best days, it was up only 4. In 2024, the S&P was up 23%. Excluding the 10 best days, it was up only 4%. This year, the S&P is up 16%, but if you exclude the 10 best days, you're down 12%. Huge difference. So let's look at those 10 best days of every year. In total, the 10 best days in 2025 were particularly stark, 32%. So you really had to be involved in the 10 best days. But that top 10 day was April 9th, 2025, when the market was up 9.5%. So that was the tariff lows. If you missed that day, you've had a bad year. And excluding the 10 best days, the market's down 12% this year. Okay, so it's the tariff bear market that determined everything. Here's the single best day of 2025 right there, that big candle. And if you didn't own it, by the way, after that day, you also missed out on the best 6-month gain we've seen in more than a decade. Hopefully that makes it clear that you need to own stocks and try not to time the market. Now, when we look at the week ahead, Wednesday is the big day because that's when the Fed makes its December rate decision. A 25 basis point cut is the base case. That number the odds have moved around a lot. But as you can see, Polymarket currently places the odds at 93%.
So when I look ahead at 2026, I think it's a really attractive setup. Monetary policy's been tight for 3 years now, and we're just beginning to get some easing, but we also have a new Fed chair, and I think that the idea is to unleash and improve monetary liquidity. That's a big tailwind. The business cycle has been muted for the last 4 years. The ISM manufacturing, which is a measure of business activity, has been below 50 for 36 months. It's the longest stretch below 50 in the history of the ISM survey. It shows you business confidence has been muted because of inflation and then Fed tightness and then policy uncertainty and tariffs, but that all clears next year. And we know that investors are very skeptical because sentiment remains negative and people talk about an AI bubble, but measurable surveys like AAII show people are negative. And that's a contrarian tailwind because when everyone's bearish and they're sitting on a lot of cash, then if the market moves away from them, they're going to chase that. So I think that that's a formula that's very supportive of stocks next year. However, the timing is a little uncertain because we're coming off 3 years of really good gains. So I think that the first part of next year, maybe the market has to digest that a bit, but it should play out really strongly for the full year.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Crypto's been disappointing the last few months because prices are down a lot. And when prices are down, first of all, we know the mood turns really dark. People get second guess, especially because price is so important as a signal in crypto. And now people are really worried that this is the start of the 4-year cycle of the downturn, which might last a year. So that's at the back of people's minds. But I would say people should be wary that price isn't always signal, because there's times when there's fundamental developments that are really building. And I see this in equity markets all the time, while price remains skeptical. I think we're in one of those moments because Bitcoin has become an institutional asset. So that's very different than the last 10 years. Well, really 15 years for Bitcoin. It's for the first time has a different buyer. And the US government just about to finalize the Clarity Act and some action regarding the Bitcoin Strategic Reserve. That's a brand new buyer. And on Ethereum specifically, there is a huge runway coming because of stablecoins, which is a tokenization of a dollar, but it's just the start because we know that BlackRock and Robinhood and everyone else wants to tokenize everything on the blockchain. That's a big unlock of activity, which is going to happen regardless of whether prices of Ethereum and Bitcoin aren't going straight up, because these are innovations in financial products. So I'm in the camp that we have not really seen the peak associated with a 4-year cycle. In fact, in some ways, because of muted monetary liquidity and all the suppressed animal spirits, the market's been super concentrated this year. I think that the best prices are going to be seen next year for both Bitcoin and Ethereum. The way this is ultimately proven is if Bitcoin makes a new high before end of January, which I believe will happen. But we did talk about that in the most recent BitMine chairman's message from November, that we looked at things that could explain the 4-year cycle of Bitcoin. In the past, what peaked that explained why Bitcoin was following that cycle. The two things that really explain Bitcoin's price peaks that were not time related, like not just saying the clock, was the copper versus gold price ratio. That makes sense because it's industrial activity versus monetary base. That has always peaked in coincidence with the past peaks of Bitcoin price. But copper to gold has actually been at a low right now, meaning we actually haven't seen copper gold peak. Why is that? I think part of it has to do with stablecoins buying so much gold this year. They are the single biggest buyer of gold. They've driven gold to an all-time high. And that means there's a huge move coming in copper. The second is, then that will mark the Bitcoin peak. The second is the ISM. ISM has always peaked in coincidence with the Bitcoin price peaks in the past. But as I mentioned earlier, ISM has now been below 50 for almost 40 months, the longest stretch in history. Until the business cycle and industrial cycle peak, I don't think Bitcoin's going to peak in price. I'm really looking forward to being at Binance Blockchain Week. It's happening in exactly the place you'd want it to, which is Dubai, where there's so much crypto innovation taking place. But also Dubai is where a lot of AI hyperscaling is going to take place, and even a lot of compute. And we know that crypto and AI are going to start to intersect in the agentic world. So I think it's an ideal place. I think what people are going to hear from us is really this vision of why crypto is entering a much different phase where it's becoming central to the economy. Up until now, Bitcoin and Ethereum and altcoins have all been a story of price, and it's created a lot of wealth, and it's really drawn in a community of dedicated people, but it hasn't created products that have actually worked in the real world. I think that's finally changing, and that's what makes the next 5-10 years so exciting.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. And if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.